Hello, hello.
We got lots of people here tonight.
Yeah, we got lots of people trickling in here. So good to see everybody. We're going to start here in just a minute because I see people still trickling in. I'm going to make you a co-host, Samuel, so that you can let people in case I'm on a different screen.
Sounds good.
Let's see here. All right, we're trying to get the technology all. It seems like it's working so far, which is rare, but good. Welcome, everybody. I see lots of people still trickling in. So we're going to give this a couple of minutes. Good to see some familiar faces. I see a lot of my friends on here. Good to see everybody. I'm excited. Let's give it a couple more minutes, and then we will get the show on the road.
Yeah, we got a lot of people out tonight, especially, I think we just sent out an email last night.
Yeah, it's great. You got to love technology. It's like you can send a message to a bunch of people instantaneously, and I can't even imagine what this pandemic would have been like had we not had things like Zoom and Netflix. I think there would have been a much bigger uproar.
Yeah.
At least we're educated and entertained, so that's good.
Yeah, if we're still like using carrier pigeons and stuff like that.
So for those of you just tuning in, we're getting lots of people trickling in here. So I'm just going to give it a couple more minutes. I want to respect your time, especially if you showed up on time. I definitely want to respect your time. We're just going to give it a minute or two, and then we'll get started with how to safely invest $100K in today's market and how to get the best returns, and just basically the things that I would be doing. I do a lot of my webinars, and a lot of my events are geared towards people that have very little or no money, because when I first started, I was in that boat. And so I've always been very sympathetic to that crowd. And because I know what it's like trying to get in this business. And a lot of people think you can't do real estate unless you've got a whole bunch of money in your bank account. But today I thought I would teach I've been getting a lot of calls lately, and I know we have some dentists on here, for example, from people that have significant amounts of money to invest. They don't really know what to do with it, and so we're going to gear this more towards them. But certainly, even if some of the stuff I'm going to teach you, just because you have money doesn't mean you need to use it. So I'm actually still going to teach you some no and low down strategies that you can do, even if you have the 100K. Keep in your bank or do other types of investing with it. And on top of it, do some of the no and low down strategies. So we're going to get into that. Now I'm going to I've got people coming in on Facebook and Instagram. I'm not sure, and Zoom. And so we have people in a whole bunch of different modalities here. So if you have questions, I'm going to try to answer them if I see them. And I've got my good buddy Samuel, who's on my team. He's monitoring all the different chat boxes, and so but if for some reason I miss your question, I definitely want to answer every single question, so feel free to email me. I think most of you know me. You're probably either a Facebook friend or an Instagram friend or on my list, but you can always email me, mike@mikewolfmastery.com, if for some reason I don't get to your question. So it doesn't mean I'm ignoring you. It just means that technology is not my specialty, and I've got a few different windows open right now, and so I don't want to miss anything. So we are going to get started though, because it's 5:05, and like I said, I want to respect your time and make this as meaningful as possible. For those of you who maybe haven't been on a webinar with me before or trained with me, I do things a little bit differently. I'm not a big fan of PowerPoint, because PowerPoint to me means everything's all pre-rehearsed, and I like to interact with my audience. So this is all about you. I want to make it as meaningful for you as possible. So put your questions in the chat box. If you're on Zoom, put them, whatever modality you're in, we're going to try to get to all the questions. And so I'm going to base this around your interaction. So feel free also, if you happen to be in my Zoom room, and there's a bunch of you in there, raise your hand or put something in the chat box, and I'm happy to answer your questions. If you ask something that's coming up, I'll just tell you, hey, let's put it on hold for a couple of minutes. And but otherwise, I'm always happy to answer your questions, and your questions will direct where I go with the content. And so, as I was just mentioning, some of you have tuned in a couple minutes late. Most of my trainings are always geared towards, I always feel like I need to help the underdog, the people that have no money and they're just trying to get started. And because that's how I got into this business 32 years ago. I had no cash. I was a starving ex-university student trying to pay off my student loans so that I could go back to school. And ultimately, I wanted to be back in those days, I should say my parents wanted me to be a lawyer. It wasn't that I wanted to be, I just didn't know what I wanted to do. And that was my parents' dream for me. So I was kind of living their best life for me, but that wasn't the best. That's not what I wanted. Luckily, I discovered real estate by mistake, and the rest is history. Can't say it was all smooth. There's definitely been some ups and downs. But over the last almost 32 years, I've learned quite a bit, and I love to share what I've learned and give back to the community. I know there's so many people that they're struggling financially, or they're stuck doing careers that they maybe don't love anymore. Somebody's reminding me to record. Thanks so much, Team GAD. You guys are awesome. I think Samuel, are you recording it?
Yeah, we got a couple backups.
Okay, we got backups, but thank you for reminding me.
If you can record it on your end, that'd be good too.
Okay, so let's do that. Thank you, Team GAD. Team GAD is in my inner circle, and they always remind me. So let's see. Okay, we are recording. So you should get a little message saying this is being recorded. So anyways, over the last 32 years, I've learned a lot, and it makes me really sad when I see people struggling financially. And I know a lot of people are right now. Obviously, the pandemic has made, unfortunately, a lot of people lose their businesses. A lot of employees have lost their employment. And it makes me so sad to see people struggling. And so I want to teach you some of the stuff that will help you. Hopefully we don't see any more pandemics, and hopefully this one disappears. I don't want to see that happen, but you'll be in a better position with the stuff that I'm going to teach you. And so the number one thing that I recommend for everybody is you need to start creating what's called passive income. And I know that's a big buzzword, and a lot of people like to throw that around. And some people don't even think it exists. So I'd like to give you an example of somebody who created a ton of passive income. And so we'll use Michael Jackson. He's the highest paid dead person on the planet. Not on the planet. He's the highest paid dead person. He made more money than I did last year, and he's obviously not working very hard. So passive income is doing something one time and getting paid for it over and over and over again. And so his music still lives on. People are still buying his souvenirs and playing his music, and his estate is making a heck of a lot of money, and he's doing pretty good for somebody who's no longer with us. So for those people who are skeptical that passive income doesn't exist, it is doing something one time, getting paid for it over and over and over again. Now, not all of us are talented enough to create music like Michael Jackson. I know I'm certainly not. Nobody would ever pay me, let alone allow me to create passive income around my musical talents. So we all have to do different things to make that. Some people write books, but the truth of the matter is the vast majority of book writers don't get rich off their book. They get rich off of the book is basically a calling card to get people to more familiar with their stuff. And if they're smart, they create some sort of back end products that they can sell. So there are ways to create passive income around that. If you wrote 50 Shades of Grey, you do all right. If you wrote Harry Potter, you do all right. If you're the typical book writer, you probably won't be able to live off that. So the one thing that we all can do without any talent, if you know the right people, is you can create passive income through real estate. And I know some of you don't have that $100,000, which is the topic for today. And so this can actually be done by people with very little or no money. And I'm a perfect example of it because I started buying rental properties creatively back when I first started. And I didn't have, back in those days, a down payment. I didn't have the $100,000 sitting in my bank account back in those days. So for every single person, the end game, in my opinion, should be to create passive income, because I know, as I mentioned, we've got at least one dentist, maybe two on this call, maybe more than that. But I have several dentists that I've been working with lately. One in particular in British Columbia, and he told me, he's around my age. I'm 55. I think he's around the same age as me. And he said, you know what? I'm still passionate about dentistry, and I would love to keep doing it forever. However, my eyesight's not as good as it used to be. I can't see people's teeth as well as I used to, and my back is starting to hurt from leaning over people's mouths all the time. And that's stuff I never really thought about. But eventually, no matter what your career, most of us at some point are not going to be able to do our career as well as we used to when we first started. And so even if you're trading your time for money, and even if you're getting a significant amount of money trading your time for it, like dentists, doctors, lawyers, accountants, etc., a lot of them can get paid some pretty big dollars while they're trading their time for it. But as soon as you stop trading your time for money because you got sick or because your business shut down due to something like COVID, all of a sudden that money stops coming in. So for every single person, your end game needs to be to create passive income for yourself. So money still keeps appearing in your bank account long after you decide that you want to keep doing what you're doing. And so the best way to do that is to buy rental properties. And that's something that I've been doing for quite some time. I built up a pretty good portfolio, and I'm not telling you that to brag. I'm telling you that you can do that too. And keeping in mind that I started with nothing. So if you're starting with $100,000 right now, the good news is, and I know some of you live in very expensive markets where 100,000, if you live in Vancouver or San Francisco or New York, Toronto, that 100,000 isn't going to buy you a shed. Even in Calgary, where oil's not exactly booming right now, you still you certainly can't buy a property anymore for $100,000. The good news is there are some markets where you can, and even better news is using leverage, the power of leverage, which is one of the reasons I love real estate. You can make that $100,000. Most of the time, you need to put 20 or 25% down if you're buying a rental property. Well, you can turn that $100,000 into something that will allow you to control a $500,000 property without having $500,000 in your bank. And so one of the things you want to start doing, and by the way, that's using bank money. If you're using bank money, then you need, 100,000 will allow you to control $500,000 worth of properties. If you're using private money, and there's a lot of private money out there, there's a lot of people with money sitting in their bank that don't know what to do with it, and the money sitting in the bank is not keeping up with inflation, and it's going to get even worse as after you print all these trillions of dollars that they've given out to help people through this pandemic. There's pretty much only one direction that inflation is going to go, and it's certainly not down. So if your money is sitting in the bank, then you're losing traction, you're losing ground as inflation continues to kick in. And so there's lots of people out there with money sitting in the bank, and money sitting in, if you're Canadian, in their RSPs, if you're American, in their IRAs and 401ks. And this money, they would gladly, in a lot of cases, loan it to you at probably a little bit more than the bank's going to charge, but it doesn't have to be exorbitant rates. And these people don't usually have the same rules that a bank is going to have. They're not going to say, oh, well, I want you to have 20% equity in the property. Most private lenders, if they're your mom and pop, if they're your sister, your friends, if they're not professional lenders, they usually don't have those sort of stipulations. And so you can control a lot of property with that $100,000. The other really cool thing is, even if you have that $100,000, I have one of my students, I'm not sure if he's on here right now, but he just bought a 98 unit apartment building. He just closed on it in Texas, and he didn't use any of his own money to do that. Or if he did, very, very little of his own money to do it, certainly not $100,000. And what a lot of people don't know, and a lot of people don't understand, is that, a lot of people think, oh, well, to have an apartment building, I need to have millions and millions of dollars in my bank account. And nothing could be further from the truth. And not only that, a lot of people think that if you buy an apartment building, you buy it and you collect rent, and that goes in your bank account. And certainly that's one way to do it. But you can buy a distressed apartment building, meaning that maybe it's got very high vacancy rate. Maybe it needs some work to bring it up to par. And you can what's called forced appreciate that building, meaning that it's when you're looking at the value of an apartment or any multifamily for that matter, when you're looking at the value of a building like that, it's based on the income that it provides. And if that income is low because maybe the owner has owned it for many, many years, hasn't raised the rents, maybe it needs some work, and you go and do the work, raise the rents and put new tenants in there or increase the rents with the existing tenants, now that property is worth a lot more money. And so one of the big pluses to multifamily investing is that you can force appreciate it by doing these things. You can buy a building that's not performing well, buy it for cheap. And I know some of you are thinking, well, 100,000 is not going to buy me that building. Well, like I said, we've had people in my inner circle buy that 98 unit apartment building using none of their own money. And not only that, when you buy these buildings, there's a lot of hidden profit centers that most investors don't even know about. And one of them, for example, is you can, obviously, if you're going and finding an apartment building and writing an offer and raising all the money to put it all together, that's going to take some time, some work to get the inspections done. That's going to take some time and effort. And you can actually build in an acquisition fee into that deal. And so, for example, Michael, who I don't think he's on the call right now because he's probably working. Oh, no, I don't. I've got a few Michaels. I don't have the right Michael. He actually moved from San Diego to Texas to be closer to his building. And he even though he didn't put any money into the building, he is retaining 30%. I believe he has 30% ownership in that building. And he also took an acquisition fee. And he's also going to have a disposition fee when he eventually exits the property. So to give you an idea of what you can do, especially if you have 100,000, you could go and put your 100,000 into the deal if you want. You can go raise the rest of the capital and give yourself a fee for doing the work to get into that building. While you're holding that building, you can get passive income every month. The rent that comes in, you can, even though if you have very little money in, you can still keep a pretty good chunk of that cash flow coming in every month. And you also get a piece of it on the back end because there's something called the BRRRR strategy. And BRRRR stands for buy, rehab, which means renovate. It doesn't mean that you have a drug or alcohol problem. I'm going to talk some real estate lingo here, but I know not everybody speaks my language. So rehab is actually a good thing. And after your rehab, you're going to rent, and then you're going to refinance, and then you're going to repeat and repeat and repeat. You're going to keep doing that. So when you see people that have large amounts of properties, whether it be single family, whether it be multifamily, a lot of people did the BRRRR strategy. And so to give you kind of a little bit of a case study, Michael raised the capital to buy this 90 unit. He's now collecting cash flow. He's going and forcing appreciation by fixing up the units, raising rents. And then after he's done that, the building's going to be worth a lot more than what he paid for it. Then he's going to do that refi part. He's going to refinance it, get money from a bank, pay out all his investors, and he's going to still own that 98 unit apartment building, but he's going to have no partners at that point. And his partners are going to win. He wins. Everybody wins. And so that's one of the things that you can do with your 100K is you can start looking at multifamily apartment buildings. You can also more easily, I kind of started with a more complicated one first, just because one of my students just recently did it, the multifamily, but you can absolutely do single family. And that's one of the things that I've specialized in. Most of my assets over these years has been the single family space. So a lot of people, they hear about multifamily and it's awesome. There's great ways and there's different profit centers in those deals. But owning single family deals, you can certainly create a lot of wealth for yourself as well. And then if you have 100,000, like I said, you can control up to a $500,000 property as long as you can qualify for mortgage with the bank. And so you don't have to have you don't have to. A lot of people think, oh, well, if I'm buying properties, I need a lot more capital. Right now, the bank money is so inexpensive. It's almost free, and it's a shame not to use it. And so leverage is really important. You're using other people's money to get yourself more properties. So even if you were in a market where you could buy a clear title home for $100,000, I'd rather have 5 properties that are each giving me some cash flow and each going up in value. And if we look at what's happening right now in the markets all across probably most of the world, but definitely in North America, most of the markets are going up like crazy. And a lot of people who called me a few years ago and wanted to buy some turnkey properties in Atlanta. The ones that did have made a considerable amount of appreciation. But the ones that leveraged and used bank money or other people's money, so instead of buying one, they bought 3, 4, or 5. Multiply that by, they're making 5 times as much money on that appreciation as they would have if they had purchased one free and clear paying cash. And so you want to take advantage of other people's money, whether it be bank money, whether it be private money. In the case of flipping, sometimes you're going to use what's called hard money, and hard money is usually somewhat more expensive than what you would pay for bank money. However, most hard money lenders don't really care that much about your credit. They don't really care that much about you. They care about the deal. So if you're finding good deals, that's something that you can absolutely do. You had 100,000, but you found a property that was considerably more and you needed the money really quickly. You didn't want to jump through a bunch of hoops. That's something you could absolutely do, is use hard money as well. So those are some of the, the most passive income, in terms of creating passive income. Those are the best ones. When you own rental properties, right now we're seeing, in addition to the price of homes going up, we're seeing the rents going up very, very quickly. And so even if you bought properties that don't really cash flow extremely well at the moment, and by the way, you definitely want to make sure you pick your markets right. And for those of you who want to learn how to do that, I'm deciding if I'm going to go into that tonight or not, because I don't know if I want to keep you here till 10 p.m., but I do have a webinar on that topic. So if that's something that interests you, how to pick a market to buy and hold in, just send me an email, .com. Basically, buying rental properties, those rents are going to go up. The values are going up very, very quickly. And it's catching a lot of people off guard. And a lot of people that I told them, a couple of years ago, you should definitely start buying rental properties that didn't, are kicking themselves now. And this stuff is very, very predictable. This is not a random thing. Even if it weren't, COVID obviously caused a shortage of properties on the market, which caused a lot of people to be fighting over the limited supply right now. But this happens all the time. I mean, we saw this in just before the big recession in 2008. We saw a big jump in prices. And unfortunately, a lot of people, that's when they jump into the market. They see the stuff on the news. I remember there was an article on the front page of the newspaper in Calgary back in probably 2006, 2007. And I remember it said home prices going up $1,000 per day. And literally the home prices were going up $20,000 to $30,000 every month until, of course, that bubble burst. But when people see articles like that, they start to think they go into scarcity mode, and they think, oh, well, if I don't buy a property now, I'm never going to be able to buy a property. And so they jump in, they start competing with other people. After writing 10 offers that don't get accepted, they just go crazy and write a ridiculous offer. And then 2 months later, the market crashes. And we know what happened in 2008, 2009, 2010. So when these things happen, you want to already be invested. You don't want to be the person that's trying to buy into a market like that. You want to be somebody who's well positioned to sell into that market. And that's exactly what I've done in numerous different markets when the time was right. So the time to get into rental properties would be sooner than later, because as those rents go up, so will the prices. People are going to be asking more, because as it gives a better yield, they're going to want more money to let go of that asset. So those are things you want to start doing right now. You want to pick your markets very, very well, because if you're not careful with picking the right markets, I think what we're going to see, and into a similar now to what we saw in 2008. It's going to be similar but different. And what I mean by that is in 2008, pretty much almost every market came down. I won't say every single market. Almost every market came down. And that crash was caused by the banks' lending policies. And as things were going up, even the banks don't fully understand real estate. They just want to loan out their money. That's how they make money. And so they just thought, hey, well, even if we lend 100% of the value of a property right now, in a month from now, it's going to be worth a lot more. So we'll have that equity. And so they were loaning money to people that were very unqualified. They were called ninja loans, no income, no job approved. They were doing ninja loans. and pretty much everybody was qualifying, and you got to write your own job letter. And you could say, hey, I work at McDonald's, I flip burgers, and I make $600,000 a year. No problem, approved. It was absolutely ridiculous. Now, of course, COVID is a much different scenario, and what we're seeing is some new trends that are being caused by how we do business now. So, for example, the fact that we're all here on Zoom right now, 2018, 2019, I wouldn't say this was science fiction. This stuff was happening. There were still Zoom calls and Skype and FaceTime. That stuff was still there, but we weren't so reliant on it to do business. And a lot of employers that never thought that they would allow their employees to work from home. Well, guess what? 2020 forced them to allow their employees to work from home. And now we're seeing that a lot of these businesses are saying, well, why do we need this big, expensive office building in downtown that we're paying lots of money on when our employees can do this from the comfort of their own home? So it's creating different trends. And what those trends are, we're seeing people leaving the inner city to be close to work, and they're going out to the suburbs where they can get more property for their money. They can have more land, more space for the kids, a better environment to raise the kids. So we're seeing a lot of that, people going to the suburbs. The other thing we're seeing is a mass exodus from markets that are expensive and also that are, where people can't get ahead. And so great example is California. And I know quite a few people on this call right now are from California. And the people that are living there are sick of the taxation. They're sick of a lot of things, taxation for one. And the homes are so expensive pretty much all across California. And so people are leaving, and where are they going? They're going to Phoenix. That market's going up. They're going to Texas. That market's gone up. They've gone to Idaho. They're driving that market up. So imagine you live in Manhattan. You're living downtown Manhattan. You're paying $5,000 a month for your one-bedroom apartment. Well, a few years ago, that was sustainable because if you had a good paying job, no problem. And who wants to drive from one of the other boroughs into the city every day for 2 hours and then 2 hours back? Nobody wants to do that. So that was sustainable. Pre-COVID, seeing is a lot of people are leaving Manhattan because they don't have their jobs anymore. Their businesses shut down. They don't have the income they used to have. And so the trend right now is people are leaving expensive places and they're heading to places that are affordable. And the other thing they're looking for jobs. And so if you follow the jobs, what you're going to see is as you go and follow those markets, you're going to see that's where the growth is going to be. So I think what we're going to see is corrections in almost every market. We're going to see a correction, but I don't think all of them are going to be down. I think we're going to see upward corrections. We're already seeing it in Atlanta, which is one of my favorite markets. Most of what we call the Texaplex. If you were to draw a line between Houston, Texas, Dallas, Fort Worth, and San Antonio and Austin, if you were to draw a line, it would basically make a triangle, and that's called the Texaplex. And within there, that's where most of the jobs are being created, and there's massive growth going on in those markets. Idaho, a lot of these markets, though, unfortunately, you may have missed the boat because Idaho a few years ago would have been a steal, but who would have known? Like somebody told me a few years ago, a bunch of people would leave California and go to Idaho. I'd say you were crazy, but they're doing it. And so what you want to do is you want to be in the path of progress before people get there, especially if you're buying and holding. Those are the markets you want to be in. And we're going to see a lot of growth. And I think those markets are going to go up tremendously in terms of the price of the real estate, but also the price of rent, because there's only so many properties and there's a whole bunch of people moving to these locations in search of employment, in search of a lower cost of living than what they've had previously. And that's where the money is in the rental properties. And so if now is a time where you can get into buying and holding, awesome. That's one of the strategies I definitely recommend, and start building your portfolio. And as I mentioned earlier, like a lot of people think, oh, well, I have $100,000. I can maybe get one property. Everything that I own today is as a result of one property that I bought almost 32 years ago, and I almost talked myself out of buying it. So everything that I've built started with that. So you've got to start somewhere. And the good news is, as these properties go up, that's you take that capital appreciation, you reinvest it, and buy more properties. So before I was in Atlanta is my favorite market. I was very heavily invested in Phoenix. And when I got into Phoenix was on sale because it was right at the kind of the peak of the big recession. And we were picking up properties for pennies on the dollar. I remember back in those days, we were writing tons and tons of offers, and we were picking up properties for very, very small amounts of money relative to today. And as that market went up, as I mentioned earlier, you want to be the person selling when everybody's fighting over properties. And that's exactly what I did. That market went up almost 50% in an 8-month period, back in around 2009, 2010. And so all of a sudden, all these properties that I had purchased and that I had tenants in, people were fighting over those kind of properties, and I liquidated and went to Atlanta. For every home I sold in Phoenix, I could buy pretty much 2 in Atlanta. So I literally doubled my portfolio and didn't have to take any cash out of my bank account. And so this is some of the stuff that is available to you too. This isn't just exclusive to me. This is stuff that anybody could do. Anybody could have done had they known where to invest and known when to invest. This is stuff that absolutely anybody can do right now as well. And that's why it's so important. That's why I wanted to do this training for you today, because I think a lot of people are missing opportunities. They've got this money sitting on the sidelines that they're not comfortable. They don't really know what to do with it. There's so much uncertainty. A lot of people are really scared. They're scared to keep their money in cash. A lot of people are worried about what the dollar is going to do. And there's obviously a lot of talk about things like Bitcoin, etc. And I think real estate's a really, really safe play to invest your money in, a lot safer than Bitcoin or any other cryptocurrency. Because even if you didn't feel safe with the US dollar, the Canadian dollar, or whatever currency it is, euro, wherever you happen to be at right now, even if you didn't feel comfortable with that currency for whatever reason, well, real estate's a great hedge against that, because guess what? If you own real estate, you could charge Bitcoin down the road if that becomes a thing. If you want to collect your rent in potatoes, you could do that. You have a lot of options when you own real estate. You don't, right now it makes a lot of sense. Most people will pay you in dollars, and dollars are valuable. But even if you didn't trust the dollar, well, as people pay you rent, convert it to Bitcoin, do whatever you want. But start getting passive income coming into your life, because otherwise, most people are never going to be able to retire. And things are getting worse. I know the Canadian government just the other day announced that they're adding all these new taxes for people that are flipping properties, because they're blaming flippers for what's going on in the economy and why the prices are so expensive on real estate. So the government's already jumping in, thinking we will try to curb it. And so it's so important to get in while the going's good. And I know for all my Canadians, it's a great time to start looking south of the border right now, because Canada is very expensive in almost every market that I'm aware of. I would say overpriced would be, and people are buying properties like crazy because the interest rates are so low. And most people will buy based on what the payment is. They don't really care what the price is can I afford the payment? It's just like if you saw an ad on TV saying, own a BMW for $500 a month. You don't really care what the price is of the car. You care about what that payment is. Can you afford it? And if you can, then yes, I'm in. And so that's the same thing with real estate, because it's affordable, artificially affordable because of low interest rates. People are paying massive premiums for properties, and but the writing's on the wall. In the case of taxes, that's going to go up. All these stimulus checks, that money's coming from somewhere, and it's certainly not from the politicians taking it out of their own pocket. That's not happening. So it's coming from our pockets ultimately. But yes, number one is definitely start looking at revenue properties for rentals. Like I said, the rent is going to probably go up tremendously in almost any market where the home prices are going up. So will the rent go up. I know I have a question here. What areas in Atlanta? I'll send you my webinar, because it talks about that in detail and how we pick the different zip codes that we work in and which ones we don't. And so send me an email, ask for the webinar, and it explains that. And then after the webinar, if you have more questions, feel free to reach out.
Sorry to cut in there, Mike. I've been keeping track of all the questions.
Good.
So if you want, I can read them off.
Yeah, let's do them, because I'm going to switch from rental properties to something different. So now's a great time to answer all those questions that pertain to where we've been so far.
Yeah. And just so everyone knows on the call, there's on the bottom right, if you're on a computer, not sure if you're on mobile, but you can actually virtually raise your hand. So I'm doing it right here. And then I think that kind of bumps you in Mike's direction, so he can see if you had a question. That might be easier for you there too, Mike.
Yeah, that'd be great because
Um,
that's actually the window I'm looking at right now is Zoom. So if you happen to be in my Zoom room, if you put your hand up, I'll see that. Or if you type in the chat box, if you're on some other like Facebook, for example, Samuel's hopefully going to catch your question, and then I'll take care of it that way.
yeah, and so Lisa asked, "What is a reasonable interest rate to expect for private money these days?"
So when it comes to private money, there's not really a such thing as reasonable. The best way to look at it, if you're the borrower, is does this still make sense for you? So if you were borrowing money at 10%, for example, and you bought is giving 12% yield after expenses, which would be very hard to find in a good market, by the way. But if it did, as an example, and that's the only way you can take down that deal, then that's reasonable. Obviously, less is better. If you're the lender, especially I used to do a lot of private money, and that's actually a strategy I recommend if you have that 100,000. It's another great passive income strategy is to be a lender, as long as you know how to underwrite deals so that you're going to get that money back and hopefully with some interest. Ironically, the lower the bank rates are, the more you can generally get as a hard money lender. And the reason for that, people don't go to hard money lenders first in most cases. They've gone through, usually you start with the cheapest money first, which is a bank, and then you've checked with your friends and your family, and you've maybe looked at some, kind of B lenders that charge a little bit more. So if somebody comes to you in a time when there's record low interest rates and they're asking to borrow money, usually they're pretty motivated to borrow whatever you charge them. And so, but really in this world of private money, there's no such thing as reasonable. It's just doesn't make sense. And there's more than just the interest rate. Interest rate's one thing, but you also have to look at the terms. Are there any fees to get into this mortgage? Are there any fees if I want to pay it out early? And a lot of times, like if you look at the banks right now, the money is record low cheap. It's ridiculously cheap. But if you were to pay out that mortgage early, especially down the road, when down the road, if you try to sell that property, there's quite often things like IRD, which is interest rate differential. There are there's a whole bunch of payout penalties. So quite often it might be very affordable while you have that mortgage, but if you try to pay that out earlier than the due date, that may cost you a significant amount of money. And so you have to look at more than just the interest rate. Make sure you look at the big picture. But every single loan is different, and you just have to look at the big picture. And there's no real such thing as, to me, it's not really what's reasonable, because there's times, in all honesty, where if I didn't have the money to do a flip, for example, and I knew it was going to be a home run, and somebody was charging 20% to borrow the money, I do that all day long. And so don't worry so much about what the lender is making. Look at what's in it for you. What are you going to net at the end of the day? And of course, if you have other options, always go for cheaper money. That goes without saying. But if that's the only way to do it, is to borrow really expensive money, but the deal is so obviously a good one that you'd be crazy to pass it up, if that's your last resort, do it. And so many times people get caught up in, oh, well, that guy is making so much money on this loan. Well, that guy is also taking a pretty big risk on you, because if you screw up that deal, they're going to have a hard time collecting their money. And they know that if you came to them, you're probably a bit of a credit risk, because why would you go to them instead of going to the bank? If you had good credit and everything was perfect, if you were low risk, you wouldn't have come to them in the first place. And so don't worry what's in it for the other person. Worry about what's in that deal for you, and then see if it makes sense to borrow at that rate and with the different terms. Because like I said, look at the big picture, because sometimes it's not the interest that's going to kill you. It's the prepayment penalties or the setup fees, the admin fees to get started. There could be a lot of other fees besides the interest.
Yeah, and for the next question we got there, it's coming from Perry, and he's asking, if interest rates come up in the U.S., how will that affect your strategy?
If interest rates go up, well, the great thing about the U.S. is quite often mortgages are locked in for 30 years, unlike Canada, where you can get longer term money, but most of the cases not. But it's actually a really good thing for us if we're buying rental properties. And the reason for that is our renters, when interest rates are low, our renters can be very upwardly mobile. And at any given time, they may say, no, we're not paying rent anymore because we want to go buy a property. It's very affordable. On the other hand, when interest rates are high, usually they're not so mobile and they're going to stay put. And so if rates go up, usually means your tenants are going to stay there longer. And it's a really big plus for you if you've locked in cheap money now. I've been through, I remember my very, very first mortgage was at 13.25%. And I remember being so ecstatic because the going rate was like 14 and a little bit. And I got 13.25 and I was ecstatic. And then I remember when for the first time in my lifetime, interest rates got down to single digits. I remember it was 9.9. I go, man, we'll never see it this low again. We'll never see this low ever. And it's like, I was so excited to see single digits. And now people are pretty spoiled. And if people say, what if the interest rates go to like 6% one of these days? It's like, historically, that's cheap. That's still cheap money. And so it's such a relative thing when you're looking at interest rates. But yeah, it's great when you own rental properties because it makes real estate less affordable for people and for your tenants, and they tend to stick around a lot longer. And usually in that sort of environment, they only raise interest rates usually if the economy is doing pretty good, because they know if they raise them too high, people are going to stop spending, stop borrowing, and that just craters the economy. So quite often when the interest rates are that high, it means that your rent is also probably gone up quite a bit. It's also tied to inflation. So trust me, I've been through, over the last 30 years, I've been through a lot of ups and downs in both interest rates and economies. And, people always say, oh, well, if this person gets into office, I'm scared to own real estate. It's like, I've been through a lot of different administrations. Just keep buying real estate and turn off all that noise around you, and you'll do a lot better. So, but yes, actually interest rates are going up is actually a good thing if you've locked in before that happens.
And I think, Janice. So what I think we can do for that webinar, Mike, is when we go send out the replay, you send me the link. I'll put it all together.
Perfect.
We can send out that webinar as a bonus just to everybody here.
That sounds great.
Everybody watching replay later, yeah.
Awesome. Thanks. Remind me, Samuel, and I'll send that to you.
Yeah. Okay. Frank has a question here, and I'll read that off. But if it's easier for you guys to kind of just unmute yourself and ask a question too, because I know sometimes I'm like half illiterate.
I actually see that question because that's in Zoom. So I get the Zoom ones. So Frank is asking how much have the house prices increased in Atlanta since 2020? And probably since the beginning of COVID, I would say a good 15%, at least with my turnkey properties, because they're tied into what's going on with the rent. And we're actually sold out. I actually went from the beginning of COVID, I probably had 40 properties in inventory. And now I literally had an investor come and buy every single remaining property that I had. And so we're searching for more. So for those of you who don't know, I sell turnkey properties in Atlanta, meaning I bought them. We fix them up. We put tenants in place. My property management team looks after them. And it's totally turnkey. And the investors don't have to do any work. And we've been in Atlanta now for almost 10 years and sold probably between 1,100, 1,200 homes there in that time frame. And it's kind of interesting because I remember probably around a month ago on my Facebook, a memory popped up from 8 years ago. And I remember I was marketing one of my properties back then, and I think it was around $105,000. And I wish I would have bought 100 of those, but we sold it for 105, and now that same property is worth over $300,000. And that's, there's a saying, don't wait to buy real estate and wait. And nothing could be more true. I see a lot of times people sell the goose that lays the golden egg because it's super boring. Buying and holding properties, it definitely doesn't have the adrenaline rush of flipping homes or wholesaling or going to a tax deed auction, for example. It's not that exciting. It's like watching paint dry. But most of the richest people I know made their money that way. If you think back to our grandparents. They never took a real estate investing course. They certainly weren't in my inner circle, but they bought their own principal residence. They probably never even moved. They stayed in that home for however many years. And because they bought that home, they were able to retire comfortably. Had they not bought the home, had they rented the whole time, they would have been in trouble. So if you take that same philosophy that our grandparents had, but then you put it on steroids and start buying more properties instead of having just the one that you live in, have a bunch of rental properties and build up that portfolio, you're set. And I'm grateful that when I was younger, I started doing that. And now I get to have a very comfortable lifestyle because of the things that I did when I was younger. And so this is the stuff that I preach all day long. And a lot of times people either think, oh, I've got time, I'll do that later. You just never know when that market's going to shift. And now we're seeing almost, like I said, almost every market has gone up considerably and continues to. And so number one, don't wait to buy real estate and wait. And then number two, don't sell the goose that lays the golden egg. Sometimes people get bored. It's like, oh, I've owned this property. It's still worth the same. So it's bringing in rent, but it's boring. And then people, in order to get that adrenaline rush, they sell the property too early, and now they're kicking themselves because the markets have gone crazy. And so, but anyway, to answer your question, they've gone up probably since COVID started around 15%, at least in the markets within Atlanta that I deal with. And the rents are starting to go up really, really quick right now. And but we're desperately looking for properties. But normally we buy from the banks in bulk. And they, of course, there's been a foreclosure moratorium, so the banks don't have any foreclosures. And so we're looking to buy one or two here and there. And as soon as I get one, I've got a list of people wanting to buy them. So I get one, I send her an email, 10 minutes later, it's sold. And so, but we're hoping that once a foreclosure moratorium ends, which I think got extended till the end of September, once that ends, we anticipate that we're going to have a lot more inventory. But in the meantime, yeah, they've gone up a lot. So is there a wait list? Yes, there is, Robert. Anybody who's interested in that, send me an email. I'll put you on the list. Let me see. This thing's scrolled up. I don't want to miss any of your questions. As a Canadian looking to invest in a property south of the border, how much cost should I factor in for a property management company to look after the property, maintenance, repairs, rental agreements? Well, most of the stuff is going to be very similar to what you pay in Canada. Typical property management company will take 10% of the rent. If your home is vacant, they'll usually charge you 1 month's rent to go market the property and fill that vacancy. These days, there's a very low vacancy in most places. People aren't moving around very much. In terms of maintenance repairs, you definitely want to watch my webinar that you're going to get thanks to Samuel reminding me tomorrow to send it. And it talks a lot about that, because if you're buying old homes, that aren't up to code, for example, well, the first electrical problem you have is probably going to be really expensive, your first plumbing problem. So it really depends on how modern the property is. The stuff that that I recommend buying for buy and hold and that I buy myself, usually it's like 90s and newer. I don't, especially in the US, don't like to buy stuff pre-1978 because there's lead-based paint issues. And if you go even older than that, then you got asbestos issues. So I like 1995 and newer. And then usually in the case of our turnkey properties, they've already been fixed up. And usually you're not going to have very much in the way of maintenance and repairs. So I hope that answers your question, but I go in a lot of detail in the webinar. So you're all going to get that with the replay. Is there a wait list? Yes, there is. Send me an email if you want to be on that list. Here in Phoenix, you can expect to pay 8% property management. Yeah, every market's a little bit different. In general, most will charge you 8 to 10%. If you get more properties in your portfolio that are all managed by the same person, quite often you can negotiate that down. But that's kind of typical. Let's see, how do you know when a market is starting to plateau and it's time to move to the next city? Yeah, when you see, it's actually really funny, because I used to use this example a lot. A lot of times when I do my tax deed training, for example, I land at the Houston airport and I usually take an Uber to the hotel where we're holding the event. And quite often people say, oh, what are you doing in town? I'll say, oh, I'm teaching a real estate class. And I always find it really interesting when the Uber driver is an expert on real estate and they start giving me advice. And then I get to the hotel and the front desk is saying, oh, you're putting on that event. Oh, well, I heard this about, everybody's an expert on real estate. And you go to the restaurant and your server is an expert saying, oh, when everybody's talking about real estate, it's time to get out. It's time to start selling. That means there's probably a lot of people fighting over properties at that time. And that's exactly when you want to sell. And here's a bonus tip for you, and something that I do differently than most people is most people keep investing in the same market. And usually that market happens to be wherever is close to home for them. And so that's going to get you in really big trouble. Like imagine you live in, and some of you do live in California, for example. Well, California has some of the strictest laws that are against landlords. Not some of, probably the strictest laws against landlords in all of North America. And so if you get a bad tenant, it takes you forever to get rid of them. Even if that wasn't the case, the price of the real estate relative to the amount of rent you get makes 0 sense. And if you're only investing close to home, that means your money is not working very hard for you. Now, luckily for Californians, up to the last few years, the market's been appreciating tremendously, but I don't see that lasting. A lot of people are leaving. They're leaving California, as we mentioned earlier. They're going to other places. And I think once COVID disappears, and hopefully it does, I think we're going to see people just looking for affordability. And I think we're going to see a correction downwards. So, but imagine that's where you live and that's the only place you know how to do real estate. Then your money is not working very hard for you. And that means you're going to keep working hard for you to keep bringing money coming into your bank account. If, on the other hand, you go and invest remotely, like in Atlanta, and I'm going to promote that market because I love it. And when you watch a webinar, you'll see why. But when you invest further from home in a market that makes sense, where your money can work harder for you, that means you can retire earlier. You can build a portfolio much quicker. The average house price in Atlanta, when I had inventory, was somewhere around $150,000. It started at $80,000. And I know in a lot of the markets that all of you are in, that's not even a down payment for you in the market that you're in. And that was the actual selling price of the home. And so the quicker you can build that portfolio, the quicker you can get that passive income happening for you, the sooner you get to go have some fun and retire and hang out more with your kids or grandkids. Whatever it is that lights you up, give back more, whatever it is, you get to do that. You get that freedom. So if you're buying places that don't make any sense, it's going to take you a lot longer to get that freedom. And then the second thing is if you stick to only your market. So imagine you did buy in California and you got really lucky, your tenants were awesome and the market's gone up, and then you go sell the property. Well, now you have to reinvest. So you bought low and you sold high, but now you've got to buy high. And so you're making a parallel move. You sell the property and now you're investing in another property that's probably equally expensive, and you're not really getting that far ahead. So as I mentioned before, before Atlanta, I was invested in Phoenix. Before Phoenix, I was invested in Vegas. And I can go from market to market. Every market is cyclical, and they're usually not on the same cycle. So 2008, they were, because we had a major problem with we had the lending crisis, and that all happened at the same time, and most markets dropped at the same time. But in most cases, under normal circumstances, Atlanta might be booming and Houston might be struggling for whatever reason, or vice versa. And so if you're able to go into a market that is lagging behind, that isn't at its peak, and you can ride that market up, you get in while it's low, you buy at a smart time. And then when we start to see these signs, such as everybody becoming an expert in real estate and builders building like crazy and people fighting over homes, when we see those sort of patterns, we know we're at the top of that market. And it's a great time to sell, but not if you're going to rebuy in the same market. And if the market's going up 30,000 a month, you're actually getting further behind unless you place that money immediately. If you do what I'm doing and what I recommend that you should be doing, and you get into a market that makes sense, you ride it up, you sell your properties when people are fighting, then you take that money and reinvest in that next market, wherever it is that's lagging behind, but has the right factors, job creation, population growth, all those proper factors that lead to future appreciation. That's going to speed up the process of which you're able to retire. And so when you start to see a market get to that point, start looking for a market that's not there. And that's one of the things that I do for my investors, the ones that have invested with me in Atlanta, at some point, Atlanta is not going to make any sense anymore, unfortunately, because I love that market. And when that doesn't make sense anymore, I'm going to start looking for places to move my money to buy more properties. Hopefully I can do what I did when I got into Atlanta and double my portfolio. But I take my clients with me and I say, hey, you know what? Atlanta doesn't make sense anymore. People are fighting over homes. Now's a really good time to liquidate. And if you want to take that money, I've already got the next market picked out. We've already got inventory. We've got a team on the ground to manage your properties for you. And that's what you want to do. You want to take your money from those markets where you see those signs, and you want to go to the ones that have all the right ingredients for that boom. And that's why I picked Atlanta. The stuff that's happening right now, I knew it was going to happen. I didn't think it was going to be because of a pandemic. I thought it was going to be for other reasons, like Microsoft, who just announced that they're bringing 9,000 jobs there, making it a hub. Those are the typical reasons. But these things are very, very predictable after you've done this for a while. This stuff is very, very predictable. But those are the things you want to look for. Let's see. Phoenix is still mega for population and job growth, though. Yeah, I mean, I still like Phoenix. It was definitely a much better bargain when I was buying there. I still think there's still some room in it. I don't think it's going to be one of the markets that crashes. I also don't think it's going to continue to grow as quickly, but who knows? If the Californians all keep moving there, yes, that'll happen. And same with Idaho. If you guys would have all bought, if I would have bought in Idaho, 3-4 years ago, I would have seen some. We all would have seen some tremendous appreciation, but we didn't know, and that was not something that I would have predicted actually. So, but Phoenix will probably continue to grow, but I don't know about the pace. And also, when markets start to get unaffordable, the reason people go there is because that's what they're looking for. They're looking for jobs and affordability. Now, for somebody coming from California, almost anywhere is a bargain. If you're leaving San Francisco and you move to Phoenix, it feels like it's almost free. And that's why, they're selling their homes in LA or San Francisco, San Diego. They're selling their homes. They're selling them for a lot more than what they paid for them. They have a lot of money sitting in their bank account, and they can go buy a very big home in Phoenix for a lot less money than what they were paying in California, plus being a much better tax system. And so they've driven up that market. And I don't think it's going to come crashing down, but I also don't think that pace of what's happening right now is going to continue forever. So let's see. I want to make sure I don't miss anything here. What is typical cash on cash for one of your turnkey homes in Atlanta these days? Well, it was around, if you were paying cash, it was somewhere around 7% at the time that we ran out of property, 6 to 7%. That is just from the income produced by it. It doesn't include, obviously, the appreciation. And one of the things that you'll see when you watch the webinar that you're going to get is one of the things that we do that's also different than than any other turnkey provider that I'm familiar with is our tenants they sign 2 contracts when they move into the property. The first contract is a rental agreement, which is 3 years long. Nobody moves in without a 3-year rental agreement. In that rental agreement, by the way, we have 5% rent increases in every year. So the tenants know the rent is going to go up on a regular basis. And then the second contract is an option to purchase. And what that means is that option to purchase is typically 50% higher than what you paid for it. So if you buy a property for $100,000, you've got a tenant living in there with an option to buy it for $150,000. And if the tenant exercises that option, and you've made 50% over 3 years, plus you've got the 3 years worth of cash flow, significantly higher than that 7%, obviously. And so we have different things in place. Right now, it actually, I wish we had written those contracts for even higher because that market's going up so quickly. But in any case, there's different ways you can boost your cash on cash returns considerably. One is leverage. One is having a rent to own program. And when you watch the video, it'll give you some ideas as to what we still are doing there once you get more properties, and also what you can do for yourself if you have rental properties, different ways to get better tenants, different ways to get better returns. And there's a lot of really cool hints and in that webinar. Is it still worth buying in Florida? Well, Florida is a very vast market. Obviously, Miami is a lot different than Jacksonville, for example. Some of the markets are very, very inflated. I like it in general, a lot of the markets, only because that's a market that's a state where people will continue to retire to. Of course, we have a whole bunch of baby boomers. That's going to be a mass exodus of people from the north heading south, and Florida is a very popular destination. There's no state income tax. There's a lot of things to like about it. But once again, I'm kind of spoiled because I was investing in Florida back during the last recession. And so sometimes when you've paid a lot less for a property and you see the market now, it's like you get a little jaded. But I think there's going to be a continuing trend. One of the things that one of my buddies is doing, he's doing what are called themed Airbnbs. And I can actually send a webinar on that too, because I actually interviewed him, but he's doing themed Airbnbs where he's got like homes that are, some of the bedrooms are designed like Harry Potter, and the garages, they've got arcades in the garages. And so when you look on Airbnb and you're looking with your kids, hey, where should we stay? And you see this Harry Potter theme, and then you see this just regular home. Of course, people are willing to pay a premium to have that Harry Potter home. And these homes have like 6 to 8 bedrooms in it. And it's once again, it's another really good passive income strategy because there's a team on the ground that manages them. So once again, if this is something that interests you, either Samuel will remind me to send you the interview I did, or send me, if we don't do that as a bonus, then send me an email once again, and I'll give you a link to that interview. But so it really depends on your strategy. But so every market's different. Orlando's a different animal than, Jacksonville, which is a different animal than Sarasota. The markets vary considerably, and it's, some of the markets are very, very tough to get inventory in right now. I've got a friend that lives in Tampa. It's like so difficult to get anything there at the moment. So let's see. So I think I'm caught up on the questions in the chat box in Zoom. What else have we got, Samuel? I hope I didn't miss it. If I missed your question in Zoom because it scrolled too fast or whatever, just retype it or raise your hand. Samuel, did you see any other questions on any of the other, or you're searching, I guess?
Sorry, my connection dropped there for a second.
I think I covered everything in Zoom, so I just wondered if you saw anything else.
Yeah, we're all good.
We're good. Okay, excellent. Okay, so let's see. What time are we here? Okay, we can keep going. It's early. So next thing I want to talk about is we're going to see I believe a massive amount of foreclosures coming down the pipeline. And we're going to see a lot of people in trouble. One of the things that I teach my inner circle is that we're not really real estate investors. Real estate investor is a very vague term. I mean, so if you bought your own home to live in, technically you're a real estate investor. If you're flipping homes, you're a real estate investor. If you're a wholesaler, you're a real estate investor. It's very, very vague. To me, what we are, the people that I teach and I train, we're problem solvers. We're on the front lines looking for people that are in distress. And it's pretty hard to shut down the global economy and not expect that there's going to be some repercussions financially for a lot of people. And I know some of you might be some of those people that are struggling right now. And so there's a lot of people that are going to need our help. And there's been, as we know, a foreclosure moratorium in both Canada and the United States. I believe it's coming to an end in both countries, end of September, beginning of October, from last I heard. Correct me if I'm wrong, if somebody knows different, but that's the last I heard. And there's going to be a ton of people that unfortunately are going to need help. And if we go back once again to the last recession, during that time, I had a company that I built that I called Foreclosure Fixers. And I know a lot of you have either sent out those postcards that say, we buy homes, or we buy ugly homes, or we'll pay cash for your home. And those are great. And you've probably received them in the mail yourself. But back in those days, I actually took the time to learn the foreclosure laws inside out. I hired an attorney. I learned how to the entire process from start to finish. And then when I set up Foreclosure Fixers, I set out a flyer that basically said, I can help stop the foreclosure. And as a problem solver, my main concern was trying to help people stay in their homes. I saw so many people losing their properties back in those days. And so I would basically quite often sit across the table. Back in those days, I wasn't as good at delegating as I am now. These days, I would definitely hire a team to do this. Back in those days, quite often, I'd sit across a table from somebody who was very close to losing their home. And for some of these people, there are two different types of people that would contact me off my marketing. Number one person, sometimes really bad things happen to good people. And I can't think of a time in history like right now where more good people have had bad things happen to them. I know a lot of people are struggling. They're losing loved ones. They're losing their livelihood. And I would try my best to keep those people in their home because quite often something traumatic would happen. Let's say they got sick. Let's say they had COVID and they had to take 6 months off of work, but now they're back at their job again. Well, these people can now afford the monthly payments. They just can't afford the arrears. And so quite often I would loan them money. I would pay off the arrears. I'd help keep them in their home and they would just pay me back. Obviously, I do the necessary things to protect myself so they couldn't not pay me. And it was a great win-win because I charged interest. But then there's a second group of people, and these people typically live beyond their means. And quite often, they're just a ticking time bomb where it wasn't because of the recession. If their car would have broken down, they would have gotten behind. If they would have got sick for a week, they would have gotten behind. A lot of Americans and Canadians live paycheck to paycheck, unfortunately. And so, but they like to keep up a nice appearance, have a nice home. And of course, back in the day, it was very easy to qualify for a mortgage. And so a lot of these people were just, if I were to loan them money, I would have never seen it back. There's no way that they would have ever been able to pay me back. And people like that, I would give them what I call a soft landing. Now, what I mean by soft landing is that I would buy their home from them, but I'd always make sure that they had enough money for a damage deposit, several months rent, money for food, etc. Sometimes I put them in one of my less expensive properties, do a rent to own for them to help them get back into home ownership. And I'd work with these people to, teach them a little bit about finance, first of all, and budgeting and living, below your means instead of over your means. But the reason I tell you this is that this business, I started off sending out those flyers, but after a very short amount of time, because I would give these people what I call that soft landing, they would tell all their friends. Because guess what? If they lost their job, they probably worked with 10 other people that lost their job. And so I start getting calls from these other people saying, hey, you helped my friend Bob and Bob and Susan with their property. What can you do for us? And then I started to get calls from the lenders whose mortgages I was saving because all of a sudden the arrears got paid off. And so I started to get calls from them. And this turned into a very lucrative business. And I didn't even have to go looking after a very short period of time, I didn't have to go looking for more customers. My phone kept ringing. And so this is stuff, once again, that for some of you that are really busy, it might be a little bit too much for you to do if you're one of my dentists on the call right now and you're trying to do less. But the fact of the matter is, if I were to build that business again, I would absolutely delegate almost everything within that. And that's stuff that you can do, especially these days. We live in the best times, I think, to be entrepreneurs and real estate investors. We can get people overseas working for us. I've got a whole team of people in the Philippines and India that I have somebody else on my team that manages them. It's not me. And so this is stuff that you could be absolutely setting up because there's going to be a lot of people needing help. And with your 100,000, that can go a long ways to bailing people out. And if you don't have that 100,000, there's lots of ways to, once again, use other people's money to do some of this stuff. Or you could do something called wholesaling. Wholesaling is basically finding a property and putting it under contract and then selling that contract to somebody else. So I'm not going to go into detail on all these strategies because otherwise we'll be here till midnight. But I just want to let you know there's a lot of different things you could be doing. But in addition to that, because of this foreclosure moratorium coming to an end, in addition to being able to help these people in pre-foreclosure, there's going to be a lot of one of the things I'm most known for is tax deeds. And what a tax deed is, when somebody hasn't paid their property taxes in 2, 3, 4 years, eventually the county is going to foreclose on that home and put it up for auction. And the county needs that money for their hospitals, for their police, their schools, etc. And the reason they can afford to go 4 years without foreclosing is they know that an investor like you or me is going to come there and bail it out, and eventually they'll get the cash that they need. And so a really cool strategy is to go there. There are these auctions that take place in some places every single month. And there's going to be a big backlog of inventory. So my favorite market to do this in, and all my inner circle people who are on this call, of course, you get to all come to this auction later on when it's safe, hopefully soon. But a really cool strategy is to go to these auctions, One of my students picked up numerous of my students have picked up properties for under 10K. One of them, though, picked up a really smoking deal for around $7,200. And the property is worth somewhere probably around 90 or 100K. And there was a tenant already in there paying $900 a month. So he just kept that tenant. He got all his money. Obviously, if you're paying $7,200 for a property and you're getting $900 a month, it doesn't take very long till you've recouped all your money. And so that's what he did. He kept it, saved up the rent, and then went back and went to some more auctions and bought some more properties. So once again, I know a lot of you want to hear more passive strategies, but guess what? I've set up a team in Houston that actually goes to the auction for my students, so that they never have to actually go on an airplane. They never have to actually step foot at the auction. I do my training in Houston, but after that, a lot of my students never go back there. And so I've got people on the ground that go to the auction on your behalf. They go and videotape the properties and the streetscape. They pull title for you. So a lot of the stuff is done for you, and it's a very short time commitment. Even though you have a team, you still have to be the quarterback to that team. But your work really involves around 3 hours a month of homework, and you can delegate that. And once again, if you have $100,000 and you go to that auction with 100K, or somebody goes on your behalf, like my team goes there on your behalf with 100K, you can pick up some pretty decent deals with that kind of money. Because there's a lot of people that go there with 10K, smaller amount to go with 20K, smaller amount yet to go with 50K. The more money you've got going to that auction, the more opportunities you're going to have, and the less competition you're going to have. So that's one of the strategies I strongly recommend. And the auction that I was talking about in Houston, that auction was actually shut down for 14 months. And if you consider that somewhere between 500 and 1,000 homes go up on the auction block every single month at that auction, they are considerably behind on liquidating the inventory. And so once again, that's one of the best places and one of the hot spots that I think we're going to see for 2022. Right now, the auctions that have opened are doing they're doing it on a very small scale, because obviously they don't want to put on a big auction, have thousands of people there, and somebody gets COVID, and now they're shut down again. That's the last thing they want. So they're kind of treading very slowly right now. But my best guess is that in the not too distant future, things are going to go full speed ahead, and we're going to see a lot of inventory coming up at these auctions. So that's another great strategy that I strongly recommend. It's something that I don't recommend you do if you don't know what you're doing. There's a lot of pitfalls with that. And this is some of the stuff that I train on. But whether you get trained for me or somebody else, make sure you know what you're doing, because there's just so many things that can go wrong. And I'll give you an example. I remember shortly before COVID, actually, this actually made the news. Somebody in Fort Lauderdale had picked up what they thought was a really nice, beautiful villa worth probably around $250,000, and they got it for $11,000, and they were so excited until they found out that it was actually a side-by-side villa. There were two attached villas, and between them there was a long strip of land about 100 feet long. It was maybe 1 foot wide, and what they didn't know is that's what they were bidding on. They actually won this unusable piece of land that you can't do anything with, and they paid $11,000 for it. And it was a very easy mistake to avoid. And I'll just give you a little quick tip. If you're looking at a list of the properties that are going up for auction, if it says 0 Main Street, 0 means that there's not anything but a piece of land there. There's no actual structure on the property. So that was very, very easily avoidable. But this person just thought, no, I'll go wing it. I'll figure it out. What's the worst thing that can happen? And that's what happens. And another example is, imagine you bought a piece of land that, let's say you got it for $100, and you thought, oh, what's the worst thing that can happen? I lose $100. Well, imagine that piece of land used to have a gas station on it, and the land is contaminated. And to get that up to code, you have to invest $50 to $100, let's say $50,000 to make that land up to code. Well, guess what? You now, with ownership comes liability. You now have the liability for that property. And so it's not just the money that you pay for the property that's at risk. You're actually putting your name on the line for anything that happens to be wrong with that property. So be very, very careful if you're planning on doing that strategy. Like I said, whether you learn from me or you learn somewhere else, just make sure you learn, or you could find yourself in a really big nasty situation. And quite often I see people at the auction. I remember there was one auction, somebody came up to me and they said, hey, you know what, I'm leaving town. I bought this property last month. I'm willing to give it to you for free. And I knew exactly what they were doing. There was obviously a big issue with it. And they thought they're just going to pawn it off on somebody else. So I said, no, thanks. But I'm sure they probably found somebody who took it for free. And I'm sure it became a nightmare for them. So be really, really careful. And let's see here. How are we doing for questions? I don't think I see anything in the chat box or any hands up in.
I don't see any more in the chat, but if you guys want to unmute yourself and ask a question as well, you can do that as well.
And if they don't, then I wouldn't mind actually elaborating on wholesaling, because I think that's an important strategy.
And I know we have Sam on the call. I don't know if he's tuned in right now, but I was just talking to him before this call here, and he's actually looking into wholesaling himself, but he has his real estate license in California, and he's wondering if he can wholesale while having that license.
Absolutely, because one of my students who just made $70,000 wholesaling is actually a realtor in California. So he's actually in the Palm Springs area, and he went to a listing appointment. And when he went to that listing appointment, had he taken it as a listing and put it on the MLS, he would have made somewhere in the neighborhood of $15,000. Instead, he made $70,000, and he was very fortunate that he knew how to wholesale, because otherwise he would have left a lot of money on the table. So you can, if you ask your broker, they'll probably tell you no. But let's just say his wife just might be a wholesaler and he's a realtor. Potentially, I didn't say that's what he's doing, and that may not even be the case, but that's what some people are doing. Absolutely. And now I see a couple of questions. Before I go into wholesaling and answer some of these questions, as a Canadian, should we buy as an individual, or should we get set up as a U.S. company? So what I'm going to tell you is that there's not one size fits all answer to that, because every single person is in a different situation. In general, if you said, Mike, I'm only going to do one deal and it's going to be, a quick wholesale deal, and then after that I'm retiring, then I'd say, no, you don't need to set something up. If you're, on the other hand, you're going to be holding properties for a long, long time, or, and once again, I should give a disclaimer, I am not an accountant. We actually have some on here. If Michael Matthews on here, I know he is. He's actually helps my students with cross-border. But so you definitely want to go to an accountant. But to make a long story short, there's two reasons why you would set up a corporation. The first one is for asset protection. If you buy in your personal name, and once again, not a lawyer either, if you buy in your personal name and somebody decides they want to sue you, they're going to go after everything that you've got under your name. And so let's say your tenant fell down the stairs, they decide to sue you. In most cases, by the way, insurance will cover it. So I don't want to scare you too much. In most cases, insurance will cover most of the things that could possibly go wrong. But let's say something happened where it wasn't going to get covered by insurance. They decide to sue you, and the property was in your own personal name. Well, the first thing a lawyer is going to do is go do a search, figure out what else you own, and try to put liens on everything that you've got. And so, if on the other hand you own that in a corporation, they can go after the corporation. If the corporation doesn't have any other assets in it, they can't go after all your personal stuff. So that's the number one thing that a corporate structure will do for you. The second thing it does is it will reduce your taxes. And so in most cases, and once again, if you say, hey, I'm just going to buy one property and I have no assets to go after, well, then you probably don't necessarily need anything. If on the other hand, you said, Mike, I own 6 apartment buildings and I've got a strip mall and my Lamborghini, you might want to protect that sort of stuff, because people will go after you potentially. I'm happy to say that after this many years, I've never been involved in a lawsuit in any country, luckily. And I think sometimes it's kind of over exaggerated. And I know people see all the time, oh, this person spilled coffee on themselves, so they sued McDonald's. Well, these companies have really big budgets to settle with people out of court. And as a result of having those big budgets, people think that's a way to win the lottery, and they go sue these big corporations. So I think as long as you keep your assets to yourself and you don't go bragging about them, and you don't pull up in a Ferrari to pick up your rent, most people aren't going to sue you. But one of the ways to protect yourself is to have these corporate structures, because if somebody goes to their lawyer, the lawyer looks under your name and they don't see it very much or anything. The lawyer doesn't know how they're going to get paid. And they're probably going to say, oh, well, I'll work for you, but I need a retainer. Whereas if they see that you own a lot of stuff, they start to see dollar signs because they know they're going to get paid from you. And then they'll take on the case. So a lot of cases are don't happen because of entities. And so for most people, I say yes, set up an entity. In some specific cases, I might say don't. I actually never say anything. What I always say is what's worked for me is this, and what I've experienced is this, and what I've seen from my clients is this. But always, 100% of the time, check with a specialist with the right designation after the name. I don't have any of that stuff after my name. I'm a real estate investor. I'm not an expert on the law, not an expert on accounting, but I can tell you that those are the two main reasons why you would set that up. And so depending on where you fit on that spectrum, that'll decide whether you need something, but talk to a specialist first before you make any decision. Let's see. Michael Matthew is here. So direct all your accounting questions to Michael Matthew. He's in Toronto, so he understands Canadian stuff, but he also does stuff south of the border. Let's see here. Michael Matthew in the house. What amount of capital is necessary to have to start wholesale real estate in the U.S.? Well, I'm glad you asked that, because I'm going to actually explain how wholesaling works and show you need almost no money. So let's see. Let's say I'm going to give you an example close to home, but you can extrapolate this and use this because there's different ways to find people online and do this all virtually. But let's say that I know you're in Saskatchewan, Vitaly, and so let's say you're dropping your kids off at soccer because it is summer now, so hopefully you don't have snow yet. And you're dropping your kids off at soccer, and there's this house that you drive by every single day, and you see there's tarps on the roof and weeds up to your knees, and every day you go, man, what an eyesore, and you just kind of drive past and you forget about it. Well, now that you're a thriving real estate investor and a wholesaler, you're going to see things a little bit differently. Because remember I said we're problem solvers? That's somebody who's got a problem. And so instead of just driving past it, now you're going to call them up and you're going to do some research, figure out who they are. You're going to give them a phone call and say, hey, are you the owner of 123 Main Street? Oh, well, I just drove past it. I don't know if you're aware of this, but like the home is falling apart. The weeds are up to your knees. It looks like it's been vacant for years. What's the scoop on this property? And they go, well, you know what? My grandma passed away and I inherited the property. And, I thought inheriting property was supposed to be a good thing. All I get is notices from the city saying I've got to go and mow the lawn, and the government wants tax money. They want property taxes paid. It's like, this has been a nightmare. I wish somebody would take this nightmare off my hands. Well, since you're a problem solver, you go, hey, well, I can take that off your hands. What would you want for that property? And let's say they said, we use really easy numbers. They said, I want $100,000 for it. And you knew that property was worth $200,000. Now, the only problem is you don't have $100,000. You don't have the ability to qualify for a mortgage. Nobody's willing to give you the money. So then you say, hey, wait a minute. I know this Mike Wolf guy. He's in real estate. I bet he might be interested in this. And so what you would do is you put that home under contract before you call me, so I can't circumvent you. And you're going to call me up and say, hey, Mike, I've got, and you're going to, I want to clarify that. You're going to write a contract, but you're also going to put some clauses in there to get yourself back out of that contract, such as subject to inspection or subject to approval from my partner. And the person who you're going to try to sell that property to, me, I'm your partner. So I have to approve of it or you're going to walk away from that deal. So you've written a contract now on the property. You call me up and say, listen, Mike, I found this property. I think there's $100,000 of equity in this deal. I don't have, if you're willing to give me $20,000, I will assign that contract to you. Assign the contract means you're going to transfer it. Originally, you put your name on there. So it's going to say, well, if you wrote the contract properly, it's going to say your name or nominee. So it's going to say Vitaly Shevrov, I hope I pronounced that right, or nominee. And what that means is it doesn't have to be you closing on that contract. A nominee is anybody who you nominate to close that contract. And so now you say, hey, Mike, if you're willing to give me $20,000, I will assign this contract to you. And, there hasn't been too many days in my life where somebody said, hey, I'll give you $100,000 if you give me $20,000. So I, of course, say yes. Here's $20,000. You get paid very early on in the deal. And then now you've assigned the contract to me and I go do my thing. And I'm the one who's taking the risk on the property. You get paid no matter what. If I do the deal and I fail and I lose money, you still keep that 20K. But that's wholesaling a deal. You've put zero into it. In most markets, to make a contract legal, you have to some sort of money has to change hands. So you put $1 down. Most homeowners won't say, "Hey, I want a more substantial deposit." Some might. Sometimes you might need a little bit more. But a lot of times this stuff happens really quick because, for example, if you found that deal, and assuming you trust me, even before you put it on paper, you might, as you're walking out the door, tell me that you might not give me the specifics like the address, but you might say, "Hey, I've got this deal. Do you want it? I can actually just put your name right on the contract right now. I'll send it over to you. And if you pay me 20K, you can just sign the contract." So this stuff can quite often happen very, very quickly if you know a buyer or two, and you now know at least one buyer. And I know if people are on this call saying they want to learn how to invest 100K, there's some people here with some money that are investors. So you definitely want to get to know some of the people on this call. But that's what a wholesale deal is. You're basically not putting a whole lot of money into it. You're doing the work to find the deal. And this, by the way, doesn't have to be you just randomly driving for dollars. I know I have Team GAD on here. They drive for dollars every day. They're in my inner circle. But you don't have to be doing that. There's ways to do it online. And in the US, it's so much easier. There's software that'll allow you to do searches for various different things, like people that are behind on their mortgages or people getting divorced. In Canada, we have something called the Privacy of Information Act. And it basically says you can't just publish lists of people in trouble. You're not allowed to do that. And in some ways, I really agree with that. I think, people should, their dirty laundry shouldn't be aired publicly on the internet, for example. But on the other hand, as a problem solver, I want to know the people in trouble. I want to have, if I can get a list of people in trouble, those are people I can put in a better situation and help them out. And so in the US, instead of the Privacy of Information Act, they have the Freedom of Information Act, which is the exact opposite extreme. It says that, hey, all this stuff should be public knowledge. And so there's software that will actually help you track down distressed sellers and people that are going through you can do searches for various different potential distress situations. And once again, you're going to put the home under contract. The goal is to build a buyer's list, but in reality, all you need is one really solid investor that's going to buy your properties. And you don't really, I still recommend building the buyer's list because at some point your investor might run out of capital or time to do as many deals as you're finding if you're really good at it. But one of my students, I don't know if he's on the call, his name's Austin. He actually lives in San Diego, or lived in San Diego, and he's one of my inner circle students. He did wholesale deals in a very short period of time, under 2 months. And that was the last I heard. He doesn't show up a lot anymore because he's very busy, but he made around $140,000. And like I said, he's 22 years old and bought his own home. He actually is now living in Knoxville, where he does his wholesaling. So he left San Diego for Knoxville, Tennessee, and that's where he's living. So this stuff isn't rocket science. Yes, Austin is a ninja for sure. And this stuff isn't rocket science, but I don't want you to think there's no work involved. The good news is it doesn't have to be you doing the work. So you could definitely train somebody how to use this software to find the distressed sellers, to make the phone calls for you. You don't really, like I said, you don't really need a big buyer's list because my inner circle, they're all hungry for deals. And so this stuff, none of it is rocket science. And so for people that have, even if you have that 100,000 sitting in your bank account, you're thinking, oh, well, why don't I just do the flip? Well, here's the challenge. If you find a property online in the United States and you're living in Canada, or you find a deal in, I'll just pick a market in Knoxville, like Austin's working, and you live in California, well, building a team, it takes a little bit of time. And right now, all the contractors are super busy. So you might be better off, even if you have that 100,000, you might loan it out instead, or buy a turnkey property, or save it for the auction, and then go do some wholesaling on the side. Or as you're looking for deals, you might find deals that don't really fit your criteria, but they might be a win for somebody else. And that somebody else might be a win for them because they have a team. So maybe instead of wholesaling, keep your money in your bank, instead of flipping, keep your money in your bank for other projects and go wholesale the deal. And so just because you have that 100,000 doesn't mean I would save that for the stuff that requires your 100,000. And then I would do other deals that don't require any of your capital, and that just adds another revenue stream to what you're doing. But all this stuff, even if it sounds like there's a lot of moving parts to it, I assure you that this can all be delegated, because remember I told you earlier that I've sold around 1,200 homes in Atlanta over the last almost 10 years. I don't do very much of the work with that. I've got my teams, I've got my systems in place. It's my money working for me, but it's not my time. I'm not the one finding the deals. I'm not the one fixing the homes. I'm not the one managing any of these properties. And most of the time, I'm not even the person selling the properties. I've got salespeople. A lot of them are realtors and financial planners that refer people to me. And it takes up very little of my time. Remember, I have three main revenue streams. One is my rental properties. That takes up zero of my times because I've empowered my team to go make the decisions for me and deal with the renters. And they know to only call me if there's something really major. If a tenant dies or the home's on fire, yes, let me know. If a tenant's late with rent or an appliance breaks, I don't need to know about it. It's just fix it, deal with it. So that's very, very passive. My second one is selling turnkey properties in Atlanta. As I mentioned, that's all done by other people. It's my money working for me. It's not my time. Very rarely do I do any of that. The only thing that takes up my time within my businesses is my trainings, my inner circle, these webinars I put on now and then. And I look at that not as work, because to me, my inner circle is my family that I've handpicked to be in there. And so it's me just hanging out with my family and educating them. And doing these webinars to me is part of in January, I did a TED Talk in Las Vegas, and my topic was happiness and fulfillment. And to me, fulfillment comes from giving back and teaching other people some of the stuff I've learned. And COVID actually, to me, has been a blessing in disguise. And I know I'm trying not to be insensitive, because I know a lot of you have been through a lot with COVID. For me, it gave me a lot more time to do the things that I probably should have done earlier, because I want to teach my grandkids all this stuff that I'm teaching you, and I want to have that available. And I always kept putting it off because those of you who know me know I'm a nomad. And right now I'm in Costa Rica, as a matter of fact. But I normally travel full time, and I don't stay put very long. And COVID actually got me. I went to Canada for 7 months, and then I went down to Mexico for 9 or 10 months. And now I just got to Costa Rica around 2 weeks ago, but I've been a lot less mobile than I normally am, and it allowed me to create this stuff. And this is where I get my fulfillment from. I do a lot of volunteering. I do a lot of give back stuff. I love to teach. And so this is my fulfillment. I don't look at this as my career. I don't need to do this. I'm doing it because I strictly for the passion and the love of doing it. But if I stop doing it, my passive income, and even if I never found another property again in Atlanta, my rental properties support my lifestyle. And that's what I want for everybody in this room. I want you all to at least be aware. I want to put it on your radar, because most people don't know where to start when it comes to their finances and making money and putting things on autopilot. Most people don't have a clue how to do that. And I didn't know either until I kind of got into this game. And as my career evolved, if we had this conversation 15 years ago, I used to be a workaholic. And there were lots of days, that I was working 12 and 14-hour days. It didn't really bother me that much because I was passionate about what I was doing. It never felt like I was working 12 to 14 hours. But the truth of the matter is I wasn't spending as much time as I should have with my daughter when she was young. She's 26 now. Luckily, I got lots of time with her now. I've got 2 grandsons. And had I not learned about passive income and delegating and doing all the things that I now do that free up my time, I would be very, very busy. Probably working, if I was working 12 to 14-hour days back then, I'd probably be working 20-hour days now. I can't even imagine how many hours a day I'd be working. And so for those of you who are looking at some of these strategies and think, oh, it sounds like a lot of work, I assure you every single thing can be delegated. Like I said, we sold 1,200 homes in Atlanta, and I don't live in Atlanta. I can count on 2 hands the number of times I've even been to Atlanta. And yet I love that market, and I built a solid team there and got great systems in place. And every single person on this call could do the exact same. And even better yet, my students in my inner circle, they get to adopt my teams. They don't even have to go build their own teams. So anyway, the main reason why I love teaching, though, is I get a lot of fulfillment from that. And this past year and a little bit, I've built my inner circle. Before that, I used to do 1 or 2 trainings a year. I would typically take people down to Houston, teach them how to do tax deeds for 4 days. Then after the 4 days was up, I would hop on an airplane. I'd go somewhere tropical, like where I'm at now. And after 6 months or so, I'd get bored, and I'd call up my team and say, hey, maybe we should start up the marketing. Maybe I'll do another event. And then when COVID hit, I, for the first time, started to get calls from a lot of my friends telling me how they lost their jobs or their businesses, and can I help them? And I thought, well, if I'm going to help people, I might as well do it in a group setting instead of one-on-one. And that led to me doing these 3-day online trainings over Zoom, which I didn't think I could sit in front of my computer that long, but I loved it. It was fun. And then it ultimately led to me building the inner circle. And so I want to give you all an invitation. As you all know, I'm not uh, a salesperson. I'm not here to force you to do anything you don't want to do, but I at least want to let you know about what we're doing in there. Amazing community, which I purposely keep very, very small. And I just teach all of my best strategies. And I always bring in, a lot of my friends that excel in some of the strategies that I haven't done. So, for example, this Saturday, a buddy of mine who does notes, which a note is basically a mortgage. In most cases, people buy non-performing notes, meaning people aren't making the payments on these mortgages. And quite often, if you buy that note, it allows you to foreclose on a property. It's another way to pick up a property where you don't have to compete to get it, because if you own the note, you get to do the foreclosure. And so I bring in a lot of experts on different topics. And I've decided that when I look at what other people are offering in this industry, and some of I don't like to talk badly, but there's a lot of crap out there. And in my inner circle, you get one-on-one time with me, and I've got several different coaches. Most of them are my students. These aren't just random people I picked up off the street saying, "Hey, do you want to teach real estate?" These are people that have excelled within my training. Austin's going to be one of my new coaches because he's just crushing it right now. But these are people that are on the front lines doing deals. And so the program, actually, Sam, would you mind? Maybe I'll unmute Sam, because Sam's actually the person who you're probably going to talk to if you want more information on this. So just a brief rundown on. I'll let you just explain a little bit more about the programs. And sorry to put you on the spot, but I thought you'd be better at it.
No, I'm happy to share on that. So, yeah, kind of how the program works is there's credit score in the world. We also have payment plans available, which just kind of breaks up those payments monthly. And, if you want to make us a deal and be like, hey, payment plan sounds great, but what if I gave you a down payment so I can get some lower payments? Well, of course we can make that work for you. However it works. And then if you're totally strapped for cash right now, that's why we do these free trainings, is because we know not everybody can get that level of support right now, but we really do believe in giving back and making the biggest impact possible. So stay tuned for more of these trainings if it's just not something that you can do right now.
Yeah, thanks, Samuel. And yeah, I'd love to have you in the group. I know a lot of you personally, so but every single person who's going to join, you're probably going to talk to Samuel first, and then after that, you and I are going to get on a call, and I just want to find out what your goals are, what you're trying to achieve, and my goal for everybody is to get them a return on investment. If you're a real estate investor or problem solver, as we are, the goal is to get the biggest return on your investment possible as quickly as possible. So I don't take it lightly, the amount you have to invest, but I also want to keep up the integrity of the group. And obviously I want people that are invested. If it was, some people come to me and they say, oh, that's so expensive. And to me, if you say anything's expensive, you're probably not going to be a good real estate investor. And the reason I say that is you should never look at the price. Because a lot of people buy homes because they're cheap, and that is the worst reason to buy a home. That will get you in trouble. The reason to buy a home is because of the return that it's going to give you. And so if it's if there's a training and it's in your mind it's a big stretch for you, well, you want to look at what's that return on investment going to look like. If I invest my money, how soon will I get it back? And the truth of the matter is, you're going to get to learn tax deeds. Well, one tax deed deal should pay for your entire year of training. It might take you two. Same with wholesaling. Your first deal maybe only make $5,000. Maybe it's not a huge win, but I've had other people make $70,000 on one deal. I've had, like I said, another student buy 98 unit apartment building using none of his own money. And the great thing about the community is, like I said, I've handpicked everybody who's in there. They've all had a conversation or two with me, and we've got some people in there with an incredible amount of capital. They don't want to do the work. They've got money, and as people bring in deals, they've got the money to help take them down. I've got other people that have a lot of spare time. They lost their job. They lost their business. They don't have a lot of money, but they have a lot of spare time to go do the work. And so if you're a go-getter and you're willing to apply what I teach you, it won't take you very long. I'm not saying it's going to happen overnight. I don't want you to think none of this stuff is get rich quick. Some of my students get results very quickly. I've had others that it takes a little while. It takes a little time to get off the ground. So I don't want to take if you're having trouble putting food on your table, don't think that, hey, in a month I'm going to make you a millionaire. But if you have the ability to do the investment, I will do everything in my power to get you results as quickly as possible. And my inner circle members will tell you that I'm there for them at all kinds of day and night to help walk them through deals. Sometimes they call me with personal issues, not even anything to do with real estate or money. It's they're going through something. So I'm kind of also a life coach for them. And I also bring in a lot of really cool people. I brought in a buddy of mine who's an ex-NFL player who has a really cool story of how he was given up for adoption, and football was kind of his. It was just kind of his way of having a life where he felt proud of himself, and eventually got in the NFL with it. And so I'm actually bringing in a buddy of mine who has been in like Star Trek and the Transformers. And these guys I'm not bringing them in because they're actors or football players. I'm bringing them in because they have amazing stories. Yesterday, I brought in a musician who wrote that jingle, "Have you driven a Ford lately?" I'm not sure if some of you are old enough to remember that. I certainly do. But he's got an amazing story of how he overcame a whole bunch of addictions to get to where he's at. And now he's a very high paid musician. He toured around with Pink Floyd for a while. So I'm bringing in some people, not just to teach you real estate, but there's a lot of personal development, because if you don't have the mindset right, the rest of it's not going to work very easily. And anyway, I'm very, very proud of this program. And if you think you're a fit, or even if you think it's a bit of a stretch for you right now, at least talk to Sam and we'll see if we can work something out for you. And like I said, you're one deal away from changing everything. And that's like I said, the first deal I ever did 30 plus years ago, I almost talked myself out of doing, and I didn't really know what I was doing back then, but luckily I stuck with it and it happened to work out. But if this is something that you've always been interested in, I would love to at least have a call with you, and even if you don't join, we'll give you some direction and help you get going the right direction so you can make the money to eventually be in this program. So thanks for the kind words. I know some of my inner circle people are typing really nice things. Thanks. I see Rose's comment. Thank you so much. And anyway, I'm very grateful for my community. And like I said, this is my extended family, and I'm very proud of the program. And it's been, when I first did it, I wasn't expecting to do it for very long, so I'm not used to having this kind of commitment. And I keep adding more and more bonus sessions. Instead of taking away, I keep adding more and more because I'm having so much fun with it. So anyway, it's not a hard sell. If you get on the call with Sam, he's not going to pressure you. As you know, I don't pressure anybody. If this is a good fit, I at least want to give you the opportunity. If it's not a good fit, no problem. We're not here to force you to do anything you don't want to do. But I'm always here for you no matter what. And we will be doing some more sessions as I see, changes in the economy, changes in the real estate market, et cetera. Because I always like to keep everybody up to date. And but I'm here for you. And if you want to work more closely with me, I'd love that opportunity. So any questions? I'm not sure if anybody typed anything in any of the channels that I don't have access to. But Samuel, do I still have you on the call somewhere?
Yeah.
There you are.
We didn't have any questions come in through the other channels that I can see.
Okay. And if I missed your question, like I said, just because sometimes that chat box goes a little fast, email me, mike@mikewolfmastery.com, or just reply to the email that you got from me, and that'll get you me. So I will answer your questions if I missed it, and I'm always happy to help any way I can. So I want to thank you all for tuning in on your Thursday night. I hope you got value from it, and I hope you're all doing well, and I can't wait to see you all soon somewhere, hopefully live in person. So, and thanks, Samuel, for all your tech help and being the question reader and all that good stuff that you do to make this stuff a reality for us.
Yeah, I'm happy to do it, and I'm glad everyone showed up tonight, and we got lots more in store for everybody here too. So I took notes on just everything that we said we'd send out. So it seems like we got a couple bonuses coming along with the recording. So
awesome.
Some good stuff for you guys coming out.
Awesome. So yeah, as long as you remind me, I will send that to you, Samuel. And then yeah, we'll send. I'm not sure how quickly this all gets edited. I don't think it really needs any editing. So pretty soon you should have all the bonuses and the properly and have not overload the coaches. And obviously, if I bring 10,000 people to Houston and they all are doing tax deeds and competing against each other, nobody's going to get any deals. So I have to obviously limit things for different reasons. But I always love teaching and mentoring and helping, and I'd love to at least have the opportunity. And like I said, even if it's a stretch for you, just get on a call with us and we'll try to figure something out. And once you do that first deal, it won't be a stretch for you anymore.
Yeah, make us a deal. We're real estate investors. We're problem solvers. So if you're down to get creative, we can make something.
Perfect. Well, thanks again, Samuel, and thanks for all of you that tune in year after year. There's a few of you, I see your name every time I do a webinar, and I just appreciate you following me and putting your trust in me. And like I said, hope to see you all in person. I can't wait to do some live events in the not too distant future. And I'm a hugger, and I'm not going to get into this COVID stuff, but I miss hugging people and seeing them in person. And I'm hoping things change very, very soon for all of us. So stay safe, and thanks again for tuning in, and we'll see you all soon.